Welcome back. We're done with 2023, so today we're going to go into 2024. I'm going to give you the top 5 things you need to look out for in the next 12 months if you want to be a successful options trader. The first thing that we're going to cover today is volatility. Looking back at 2023, we saw one of the craziest rebound years that we've had in a long time. 2022 was a down year, a red year in the stock market. In 2023, we started off with a bang. Right now, as we speak, the NASDAQ is up over 50% year-to-date gains. The SPY is up over 22%, and Dow hit all-time highs, and the Russell 2000 is up over 12% on the year. A absolute massive rebound year for the market. Thinking about volatility as an options trader, the first thing you should do, if you don't know what the VIX is, the VIX, that is the 30-day outlook on the S&P 500 implied volatility like meter. You need to be tracking the VIX. Every time we see a VIX hit 20 to 25 or higher, that's a very volatile market. You could see larger swings, larger price action movements, and you could see larger downtrending in the market. So the VIX is one indicator. If you go back to 2020 during COVID, when the VIX went from 10 to 200, you'll know exactly what I'm talking about. So everyone should be tracking the S&P 500 30-day outlook of implied volatility. Implied volatility is also something that I've seen at an all-time high during high importance news events. It is so important to track your economic calendar and understand when these high important news events are going to take place, such as Jerome Powell speaking, FOMC, CPI data, unemployment data, all of these things. And the biggest one in 2024 we're going to cover soon, the presidential election. This is going to spike volatility in 2024 at levels that we have not seen since 2020, when we had the COVID recession and when we had the 2020 election. So we're going to see some massive implied volatility, and it's so important for you to know when all of these events are coming. Speaking of high importance news events, 2024 is going to bring one of the biggest, if not the biggest, we get every 4 years, the 2024 presidential election. The 2024 presidential election is number 2. This is something you need to be on the lookout for during your options trading, because it's going to get nasty. You have your Republicans, you have your Democrats, you have your independents, all of these running for president, and they're going to be cutthroat, crushing each other, talking about monetary policy, talking about foreign policy, talking a lot about the stock market. This is going to create such a wave of events and uncertainty and people formulating opinions and all kinds of shit. For 2020, I recall that I was day trading a lot. I personally do not swing trade during these election times. When we start seeing the debates showing up and things getting heated, I stop swing trading. There's so much unknown and uncertainty in the overnight swings. The risk just does not weigh the reward to me. The implied volatility spikes, and as an options buyer, you're most likely going to get crushed, and as an options seller, you're able to take massive losses. I love to just day trade, get in, get out, and then continue my journey without having that overnight risk. With the presidential election in 2024, each quarter needs to be taken as its own unique block of the year. Quarter 1 all the way to the end of March should be treated differently than quarter 3 when we get actually into the elections and the polls and such. So every quarter of 2024 is going to be unique. You need to fine tune your strategies and move and be fluid with the markets and the increased high importance news days and the volatility. Being fluid, being able to adjust and adapt to the markets is going to be crucial to your success in 2024. I guarantee you will not be able to trade the first quarter the same way you're going to trade the third or fourth quarter of this upcoming election year. If you're talking markets only, like does a Democrat win, does a Republican win, what's the market going to do? Yes, it's going to act totally different, right? Because a Democrat wins, policy stays the same, everything that's been being forced and driven forward for the last 4 years is going to keep driving the markets. Where the money's being put in, the money's going to continue to being put in. Whereas if a Republican were to take over, you're going to see a massive liquidity switch. You're going to see different companies start to arise, other companies start to fall. Yes. Just on the stock market itself, it does matter if a Republican or a Democrat wins, because you see a Democrat win, you're going to see the healthcare sector get a natural boost. A Republican wins, you might see big tech get a natural boost. So you're going to see that affect the markets no matter what. 2023, I think, actually, I'm going to go back to 2020. For the last 3 years, I don't think there's ever been more of a spotlight or a time where people have cared or given a shit about what the Federal Reserve has said, unless you're a stock trader, right? But now it's like public, it's wide known. Jerome Powell is famous. He's a fucking massive celebrity, Jay Powell, and that comes from what he did from 2019, 2020, COVID, all the way until now. Every time the guy talks, there's a new meme video and thousands of posts, hundreds of live streams of it. I mean, he's a massive celebrity now. And I think this year, coming up in 2024, what he does is going to continue to be under the magnifying glass of the entire world. If that man says he's going to cut the rates twice next year, I guarantee you he's cutting the fucking rates twice next year. If he says he's holding rates the same for 2024, I guarantee you he's holding the rates straight up for 2024. He is a straight shot. Whatever he says, he does. He doesn't really come off of that. He's been doing that for the last 3 or 4 years. Everything he said he's going to do, they've done. They've never come up with some major surprise. They've never come out with something that was just out of left field. The minutes are released from FOMCs when they decide the monetary policy with the Federal Reserve, and then he pushes it forward. And I think that's going to continue in 2024. So if you are following Jay Powell and you read the minutes and you understand what's going to happen during the rate cuts and the rates and everything, it's a pretty good chance that is going to happen, and you're able to trade the markets efficiently and effectively understanding that. Massive thing that a lot of traders don't know. Rates have been going up through the fucking roof for over 5% for the last year, and that's all hicky-dory. The markets are basically at all-time high right now in the end of December. The Dow, the NASDAQ, fresh all-time highs. But what you don't know is that a lot of people fail to look at the historical data, the statistical data that we spoke about earlier. Did you know that the market starts to decline mostly when the rates start coming back down? So as the rates start getting cut, you're going to see market declines in the previous historical data. Does that mean it's going to happen in 2024 if we have 2 rate cuts? No. It doesn't mean it's going to happen in 2025. No, but it is an interesting piece of information for you to know. If you go do your own research right now, go look at it. Last times, I think the last 4 times, the rates were cut down significantly. The market dropped with the rates. So be on the watch for that. If we get a rate cut early in January, I will be on high alert that maybe a pullback is coming. If we don't see a rate cut towards more of the election, then I will say, shit, this election is going to have more weight now than ever. And that's the way I'm looking at it. So do your own data and research, but I think you'll find it very interesting that markets tend to decline when the rates are getting cut, not going up. Uncertainty, number 4. Can you confidently sit here and say, you know what the fuck is going to happen in 2024? Because I cannot. We have an election. We have Fed rates. We have all-time highs in the market going into 2024. We have so much uncertainty. People don't fucking know what's going to happen. If anyone says they have this great prediction of 2024, they're full of shit. Don't let others' opinion and influence sway your opinion of what's going on. Take it day by day in the stock market when you're options trading. There's so much uncertainty. The blood is going to be poured when these elections and these debates start coming out and Donald Trump starts coming out telling everyone he's a pussy. It's just going to be wild. It's going to be like the wild, wild west in America. I feel like it was so much uncertainty. There's no way you can truly predict what the next day is going to bring. That's why you need to do your best to protect your risk, protect your upside, your downside, and protect your underlying assets. No one's going to do it for you. When things get uncertain, people get uneasy. When people get uneasy, people do stupid shit. Don't be one of the stupid shits. Take care of yourself, take care of your equity and your assets. That's what I plan to do. I plan to scale back nicely in 2024 and just take it day by day, because with uncertainty comes implied volatility, like we spoke about, and with implied volatility comes more uncertainty as rapid movements happen in the market. If you had to do anything dealing with this uncertainty, 1, take it day by day. 2, protect your underlying assets and stocks. Use the options given to get creative, to hedge and manage your risk. Understand the high importance events as we spoke about, understand implied volatility, and understand how those go into the uncertainty aspect of 2024, the unknown, as we go into fresh all-time highs, a fresh presidential election, and fresh rate cuts that are supposed to come, that could possibly come with this inevitable recession that people have been talking about since 2020. We're going into 4 years now. People are still screaming that the market's bottom is going to fall out. Well, we've seen fresh all-time highs, but we haven't seen a fresh pullback. 2023, we did have a red year. We did see a down year, but it wasn't really the crucial pullback that people think the market needs to be back at a fair value price. Protect yourself. The rise of the 0 DTE contract, number 5. The 0 DTE has become a market maker. Yesterday, as we film this, December 20th, if you go look at the charts on December 20th, 2023, the market got a rug pull. The market had a $15 million at-the-money put options contract come in. That is a $47 billion option contract. If it were to be exercised and you were to assume the underlying stock, a $47 billion move. Is this market manipulation? Yes and no. It was bought through options contracts, which led a rug pull where people had to start covering their positions and adding those shorts as a hedge, and it led to a $7 drop in an hour and a half in the market. And it was all triggered because of 0 DTE options contracts. Not only are retail investors such as myself using 0 DTE contracts now, but you're also seeing institutions and hedge funds abusing the 0 DTE because it's a market mover. You have to be aware of volume inside a day. If you don't understand volume, you have to understand volume when you're talking about a market move. Every options contract that is opened and closed on the underlying stock, the S&P 500, SPX, all of these items. Because when a hedge fund steps in and does something like $15 million on puts, everyone who knows how to read the tape or sees that volume come in is going to hop on board and piggyback that massive play, and it's going to lead to a rapid sell-off like it did on December 20th, 2023. A day I'll never forget because I got smoked for about $200. 0 date to expiration. That is buying an options contract on the same exact day it expires. As an options seller, I love utilizing this strategy and taking advantage of 0 date to expiration options because I think that it gives me a statistical edge over options buyers. Options buyers, you're going to see them get crushed by theta. You're going to see high priced options contracts. In 2017 and 18, when I started trading options, you could buy a SPY contract for $1. $100 out of the money. That $1 out of the money contract now is probably $400 or $500. That's because of the rise of the retail trader and the amount of options contracts being traded more than ever in 2023, a substantial amount. And I assume in 2024, it's going to stay the same. We're going to see a massive spike of options contracts, 0 date to expirations, and more. And so you need to understand that if you're an options buyer, you're going to be buying very inflated price options contracts. The 0 date to expiration has become a market mover, and people just need to understand how to follow it, track it, understand it. We're going to have uncertainty and volatility, so it's tough to swing. We're having the rise of the 0 DTE and day trading, so it's going to be tough to day trade. Overall, I think 2024 is going to be a tough year in the options market, and that's why I'm sticking to my guns, sticking to my strategy, and I'm going to be tracking the 0 day options like a hawk. I hope you have an absolutely amazing 2024. I hope you crush all of your goals. Remember, it's going to be a wild ride in 2024, so protect yourself and prepare as much as possible. And remember, Max Options Trading is always going to be here to help you reach your goal. Trading professionally is that Jay Powell does not beat off the course. He doesn't beat off the horse. Jerome Powell doesn't beat off a horse. Jerome Powell got the Guinness Book of World Records for the largest penis in 2023. That's a fact.